Welcome to DAO Deep Dives, where we interview DAO founders, core DAO contributors, and everyone else who works on the periphery of decentralized autonomous organizations.
Welcome, guys. Today, we are joined by James from Reserve Protocol. Super excited for this episode. They're doing some amazing things. Welcome, James.
Thank you for the welcome. Glad to be here, guys.
Cool. So, who are you, James? What are you doing in this world of DAOs and crypto?
Sure. So I'm James Glasscock and the head of ecosystem at Reserve Protocol. I, grew up in Tennessee and moved out to California for the U.S. Navy and for college, and started my professional career during the dot-com bubble and was starting at KPMG, which is an accounting firm. They had a media incubator at the time. Then went to work in venture capital for a few years, Zone Ventures in Los Angeles. And then I went into a bunch of operating roles at media companies pretty much over the last 20 years. Turner Broadcasting, Warner Brothers, another online video platform called Machinima that was acquired by Warner Brothers. And then started dabbling with crypto a little bit in 2013, bought a little Bitcoin. 6 months later, it was worth about 20 cents on the dollar. So I knew I was onto something.
Yep.
For whatever reason, I don't know, I decided to buy more. And a few years later, really in 2017, is when I professionally started working in the space. And I invested in Reserve Protocol actually in 2018. I was a seed investor in the project. And people often ask me, why did you invest in Reserve? And by the way, it was 5 years ago. And of course, at that time, I didn't really have a good understanding of what they were building, which at the time, the original concept was an algorithmic stablecoin. But I really liked the founders. I trusted them. It was very unusual in 2018 to meet mission-driven founders that were building something for the long term. They had the right vision, but they did not yet have the right product idea. The vision was that stable currency should be a human right, and that you've got these crazy hyperinflation effects happening in 100 countries around the world. There's 5 countries with inflation over 100% right now. And so they wanted to solve that. They wanted to help people access stable money and shield from the effects of political fumbling and big tech companies and things like that. The team went on to do a couple of years of R&D and ultimately discovered that algo stablecoins weren't going to work, and ultimately settled on one-to-one asset-backed stablecoins. On-chain, everything's on-chain. Asset backing is on-chain. It's got over-collateralization on-chain. It's got revenue sharing on-chain. They're on-chain maxis. And I joined the team full-time about 10 months ago, and am challenged with the idea of how do we cultivate an ecosystem of entrepreneurs and apps and protocols that want to launch asset-backed stablecoins, and how do we basically inspire them to do it? We can't tell them to do it. We can't do it for them. It's really a fun exercise in decentralization. And the harder part is focus and growth while being decentralized. That's where I spend my days.
Can you just tell us what your own interpretation of a DAO is?
Yeah, it's a cool topic, and it's really fun to go down the rabbit hole of what a DAO actually is. Lots of different people have different definitions of it. I think Bitcoin is like one of the coolest DAOs of all time. It doesn't quite have an organization part. It is fairly autonomous and decentralized, though. And I would imagine some of the best DAOs in the past, present, and future will be natural, less structured, less organized, less consultants involved. Yeah, decentralized and autonomous and organization. That's how I think about it. And there's obviously all kinds of iterations of DAOs, and there's some DAOs that even have legal structures to them. And there's probably some good arguments on why that's needed. We're in the middle of this huge paradigm shift right now from Web 2 to Web 3. And most of the world, still 99.5% of it, is Web 2 world. or Web 0 or whatever you want to call it. It's not ready for this idea of decentralization. It's not ready for your press release that doesn't have a city on it. It's not even ready for a press release. In this world, I see a bigger trend toward like social proof and results and impact, more about what you're doing and how you're impacting the world than what you're saying you're going to do. We're all coming out of this last 50 years of gatekeepers that moderate what is said and what's not said, what's okay, what's not okay. And we've moved into this world of digital production and digital distribution, which breaks down those walls. And you've already seen it a little bit over the last 25 years, less so in organization design and financial tools, but a lot more so in like communications and networks and social media and things of that nature, right? The truth moves a lot faster, moves faster now than it ever has in history. And so that is going to continue to happen. And it's also going to happen in how we organize teams and entities and movements, and of course, currencies and things of that nature.
I like it. You mentioned a little bit about Reserve, but in a short elevator pitch, what is Reserve?
Yeah. Reserve is a permissionless platform for anyone to create asset-backed currencies. We call them R tokens. By the end of this year, there might be 8 or there might be 20. I'm going to stick to what you said about short elevator pitch and not say anything else.
That's awesome. Would it be a fair categorization to think about R tokens like your ERC20 equivalent or for a stablecoin?
Yeah, R tokens from the Reserve protocol, or these are a set of smart contracts on the Ethereum mainnet. And you can build an R token with any ERC20 in the collateral basket. The idea behind R tokens is that you can diversify counterparty risk. You can diversify collateral risk. We all have heard this, right? Don't put all your eggs in one basket. And if you're a wealthy person, then you might have professional wealth managers that do this for you for a living. They get your assets, they put some stuff in some real estate, maybe some commodities, maybe some stocks, maybe some crypto. What our tokens enable anyone to do on chain, you don't need an investment manager, is anyone can launch a currency with a diverse basket of assets. And what's cool about that is as you diversify the underlying backing, you make it more resistant to censorship. You make it more resistant to black swan events. You really give it resilience that can maybe last for centuries or longer. That's how our tokens work. And largely the application to them thus far are as stablecoins pegged to $1, or a concept you might have heard called a flat coin, which is stable but might be growing in value over time because of some type of driver. For example, the underlying yield of the asset might grow the total balance of the asset. Another definition of flat coins are pegged to a CPI index. There's a couple of those out there right now. And then you could just build like an index product if you wanted to. You could get your favorite meme coins and build a basket of meme coins for people who like that for whatever they like that for. That's one of the really cool things about permissionless platforms is you don't really know how people are going to use it. There'll be winners and there'll be losers, right? There always are. And just to bring that into perspective, other examples of what I'd call kind of permissionless platforms or open platforms would be like YouTube, Shopify, and the Apple App Store. Now, they're all closed to some degree for whatever reasons. We all know Apple are into proprietary mastery. But nonetheless, when the App Store launched, most of us didn't want apps. The earliest apps were like a cigarette on an iPhone, and they weren't that great. Now there's 2 million apps in the App Store. You got Instagram and Uber and whatever it is people like these days. Shopify, there's 1 million merchants on Shopify today. And YouTube, as I mentioned, I come from a media industry background. We're in 2002, 3, 4, 5, were launching television networks. To launch a broadcast television network back then, it usually costs on the low end about $10 million, on the high end, maybe around $100 million. Today, anyone can start broadcasting for free in about 1 minute. So permissionless platforms really are a force multiplier for whatever the medium is. You don't know what creators are going to do with it. Yeah. So I think I might have went off on a tangent there. But
I like that last part, actually. I think that could be what is a DAO itself, right? Like it's a force multiplier. I like that a lot.
yeah, that's a really good point. I haven't thought of it in the same context as DAOs, but this is actually a fun thing to dive into. When you think about like how to organize companies and movements and teams and initiatives, we've all been working with a template, right? Oh, here's how an LLC works. Pay your taxes, do the board minutes, maybe a couple of other official filings, and of course, don't break the law. And hopefully you'll make some profits and you can be sustainable over time. It's a fairly straightforward template. It does vary by state in the United States, and it probably varies around the world. But and most of these templates were invented maybe decades ago. So they don't really, and they don't change very much. And the legal structures which they exist in, they don't change very much. It takes a long time for that stuff to change. When you move into this realm of decentralized autonomous organizations and have a lot of kind of new creativity experimenting, some of it succeeds, some of it fails, right? Again, permissionlessness. This is the exciting part. There's going to be winners and losers, but it's the winners that come out of the long tail, so to speak. I was thinking about this about a week ago and I'll talk more about it if we get into it here on the pod. I've been recently working on this concept called a long tail of stablecoins. I won't go on that tangent just yet, but a long tail is a book that was, first it was an essay, and then it was a book written by Chris Anderson around 2004 to 2006. What the long tail is about is as you reduce the cost of production and reduce the cost of distribution, you essentially have infinite distribution. You now have far more experimentation. And digital technologies allow interesting ways to discover that and build businesses out of it, right? Anyone who's ever shopped on Etsy knows you can get some really peculiar items on Etsy that 25 years ago you would never find in any Walmart or wherever you did your shopping. You might find it at a crafts fair or something like that. So digital connects all that. And so bringing it back to DAOs, it's really exciting to think about how people will experiment with different governance structures, how many of them are going to fail, but that's okay. We only need a couple of good ideas. A couple of better ideas is all we're looking for here. And so if that means 1,000 failures to get a couple of better ideas that can improve society, I think everyone would probably raise their hand and say, I'm up for that.
Yeah, I totally agree with you. Speaking of that, Reserve itself, is Reserve a DAO?
So Reserve is not a DAO, but each R token on the protocol has its own individual governance, and it's governed by the community. And you could say that is a DAO. It is decentralized. It is autonomous. I wouldn't call it an organization though, but each of these asset-backed currencies are siloed in their governance. And for the people who want to participate in staking and governance for those currencies, because you're a staker, you're essentially participating in governance, you're getting a share of the yield of that asset-backed currency. In exchange for that, you're also providing first loss capital. So you have some skin in the game. You could lose your money if there were like a slashing event in the future for some type of black swan or something like that. And so each of those are governed separately, and it happens in the typical governance discussion forums, and then a vote, and then an implementation on chain. That's how each of the R tokens work. I work for the company that built the protocol, and I am also an RSR token holder. As a personal RSR token holder, I participate in staking and governance to the extent that the topic is important to me.
So what is RSR in that context? We know our tokens now, which are the stablecoins launched through the Reserve protocol. And you mentioned RSR. Where does that come from? How does that relate?
Yep. RSR is the governance token for the Reserve ecosystem. An interesting way to think about the Reserve protocol is it is to stablecoins what Shopify is to e-commerce. Shopify does not launch stores. They just built a platform to allow anyone to launch stores, right? The Reserve protocol allows anyone to create these asset-backed currencies on chain. Now, actually what it allows you to do is to design, deploy, and govern asset-backed currencies on chain. What's cool is there's about 50,000 wallets holding the RSR governance token. And what it allows the holder to do, they can just hold it and do nothing with it, or they can go and stake it on an R token. And essentially what they're doing is they're helping choose winners and losers, right? Some R tokens are going to be launched by well-known, highly respected protocols. Some R tokens are going to be launched by anons, and they may or may not publish a lot of information about what their strategy is, what their track record is, and so forth. So if you're an RSR token holder, you've got to use whatever information is available to you, whatever's available in the community, to choose where to stake. More than likely, a lot of people will probably congregate around known players, known protocols. But maybe there's an anon from another community that has a proven track record, and they may not even publish their strategy of what they're doing, but because they have a good track record and they're respected, RSR holders might choose to stake on that particular R token. We'll see how it plays out over time. But once you're a staker, now you're earning a share of the yield of the underlying collateral of these R tokens. Usually the collateral in the asset baskets for R tokens are yield bearing. And the yield bearing profile could be 2.5%, it could be 8%, it could be 15%. It's essentially the net of the yield of what goes in the basket. And of course, that varies depending on market conditions. In a bear market right now, so we have those types of yields. Maybe a year from now, we'll have different types of yields. So, and just to be specific, I'll give you two examples. Right now on the Reserve protocol, there's a R token called High USD. It's HYUSD. It's high yield USD. It is a basket of fiat stablecoins, some of them with exposure to US Treasuries. And the yield profile on this, I think, last I looked, was like around 8 or 9%. Of course, it varies with market conditions, but it's like, hey, that sounds pretty interesting. It's like a DeFi savings account or something like that. And it's all on chain. It's not any type of centralization or questionable proof of reserves. You can see everything on chain. The other R token is called ETH Plus. It's pegged to the price of Ethereum. So you might say, well, that doesn't sound like a stable coin. It's stable in reference to what, right? Reference to the US dollar or to the price of Ethereum. This one is stable in reference to the price of Ethereum. It's pegged to Ethereum, but it's earning, I think, up to 5% currently. Again, it'll change with market conditions. And these are both really cool because they have over collateralization, like an umbrella in case of a black swan event. What's the purpose of RSR in this? So those R tokens, they generate yield. The RSR stakers are getting a share of that yield. And they're also providing first loss capital in the event of a black swan event or any type of DPEG or smart contract failure or whatever. When you have an R token that has Tether in the basket and USDC in the basket and DAI in the basket and who knows, maybe Pax Gold in the basket, you now have risk exposure to each of those protocols. Now, the good news is you don't have all your risk in one basket, right? You've diversified it across those four. And I'll give you a very specific example. March 9th this year, a run on Silicon Valley Bank. We all heard about it. That caused a lot of questions about Circle and USDC, which also depegged because their money was in Silicon Valley Bank and no one knew if Silicon Valley Bank was going to be saved or not. So USDC depegged to around 89 cents. At that point in time, the first R token had been live on the Reserve protocol for about 2 weeks. We did not expect to have a black swan test in 2 weeks, but it worked really well. The asset basket for the EUSD stablecoin, electronic dollar EUSD, was about half yield-bearing Tether and half yield-bearing USDC. So half of the basket has now depegged, and it's about midnight on Friday night. The protocol is pre-programmed to autonomously sell off the failing collateral and buy a backup collateral, and if necessary, slash the stakers so that it can recapitalize back to $1. It did all of that by breakfast time on Sunday morning, which is pretty cool actually, because we didn't know over the weekend. Everyone was really freaked out. No one expected USDC to be the one that's going to depeg. Most people thought that would be Tether at some point. And we didn't know if regulators were going to step back in and say Circle and USDC or not. The way electronic dollar and its over collateralization works is it just solves the problem itself. It's pre-programmed in advance. And of course, we're all grateful that regulators did step in Sunday night. And then as the banks reopened and later in the week, all the other stable coins that were dependent on USDC returned to peg. Bringing you back to your question about RSR, the role of it. In this case, RSR, these stakers, they get to participate in governance, they get a share of the revenue, and they also provided that over collateralization. They lost about 2% on that, which from what I can tell, they'll be back to net positive because again, it is still a yield-bearing asset. So even though there was a slashing event back in March, I think we did the math. It was like 6 or 7 months and they would be back to where they started and then accruing more yield.
So let me dive into that actually a little bit more because there's something I was thinking about before from a slightly different angle. You touched on SVB at that time and FTX, SVB, these kind of disasters. I talked to a lot of DAOs about frantically trying to rebalance their treasuries because they had those exposures. So you answered that from the EUSD's perspective, but would you say that that is part of why Reserve exists to help them do that automatically in a way?
It's a great topic. It's actually a big research area for me. I was looking at the ENS DAO over that weekend, and there's a crazy panic that went on. And this happened in a lot of DAOs. And so actually on my list now is to research everybody's governance forums on March 9th. But depending on how the DAO was configured, and I'm not precise on all of the issues because I'm just digesting it myself. But the issue is when it requires governance to make a change in the treasury of a DAO, and that takes 7 days or 3 days, you can't respond to a black swan, especially, and you'll see it. If you go read this governance forum post, people thought it was going to zero. We were a little worried about it too on that Saturday, that it might go to zero. What's interesting about our tokens though, is they're autonomous and they're pre-programmed in advance. In fact, the first backup collateral for the electronic dollar was DAI, but DAI was also failing on March 9th. So it switched to the next backup collateral. This is all pre-programmed, which was Tether. Can't believe it. It's awesome. Tether came through for everybody. I would have never in a million years predicted that. So if you're a DAO treasury, you don't want to have these decisions mirrored up in a governance process. It needs to be much more dynamic. And that's what's interesting about our tokens. We'll be talking a lot about this here. And what I admire most about the folks who built this protocol is they really contemplated a lot of safety mechanisms. Yes, over collateralization, diversifying counterparty risk, 5 audits now, a big bug bounty, a lot of thinking in incentive alignment so that you could build an asset-backed currency that would literally be resilient over centuries. It's definitely not a project that's looking to just solve something for a couple of years or something like that.
So how do you look at USDT? Like we found out that it's backed by some Chinese securities. It's There's always been Tether FUD in this industry.
Yeah, it's an interesting topic. I know the founders of Tether. They couldn't figure out how to make it work until Bitfinex took it over. The team that founded Tether couldn't figure out how to make a business out of it. It turns out, and it's interesting, a lot of times stablecoins are not the business itself. They're the glue. When you bolt that on to Bitfinex, who needed a safe haven for traders from volatility, well, now you can really grow the Bitfinex business. And that's what they did. Same thing with USDC. It was Circle, the company that launched it, bought an exchange, Poloniex. And they had Coinbase as a kind of co-founding board member. I don't know the exact structure, but this is a good way to bootstrap stablecoins, is with two exchanges. So I think with Tether, they have the first mover advantage, and they have these huge network effects and deep liquidity over many years. And regardless of the FUD, there's just a core group of people that grew up with it. It's like all of us, when we grew up with something, even though it's not the best solution, it's just you have a relationship with it. I think that's really been working to Tether's advantage for a very long time. Obviously, when Circle USDC came along, they said, well, we'll launch something like Tether, except we're going to be more transparent. We're going to try to be more regulatory friendly. And that appeals to some people, right? They're based in the United States. They've got some licenses in the United States, and they publish more reports that seem better communicated. And what's been great about that is that's become a forcing function for Tether, I think, to clean up its own communications around how they operate.
So let me place USDT right in the middle, and then we'll put reserve and our tokens perhaps like on this other side that we want to go towards as a better solution in this analogy. And then on the opposite end, where we know this does not work, let's call that UST. Were you in the camp on this thing is not going to work, this like two token sort of system isn't going to work, it would create a spiral and it would just destroy itself if it depegged? Were you in that camp already, or was it not as obvious to you at the time?
We weren't. Reserve was in that camp completely before Terra, so much so that our founder, Nevin, had wrote 5,000 words on Basis Protocol 3 or 4 years ago. It was a predecessor to Terra Luna. It never actually launched. And it was fairly critical of algorithmic stablecoins that were backed by their governance tokens, which is what Terra Luna was. And he was also very public about this in a couple of speaking engagements and things of that nature. I think even at this point, we regret not being louder about it after seeing how many people lost money. We're definitely vocal. When you see that, you thought everyone should get this, but they weren't getting it, right? I think Terra and Anchor had built a really good user experience. They had very compelling marketing, and people just wanted to ignore it and get those high yields or whatever. I would say personally, I had not researched it as much as Nevin had. I was definitely concerned about it, but I also never used Terra Luna either. And I think now it's I think some terminology that's come to market around stablecoins it's important to remember is the difference between exogenous collateral and endogenous collateral. Endogenous collateral is when you're using assets that are internal to your ecosystem to back something with. In the case of Terra Luna, UST was backed by a Luna token. A Luna token has no fundamental value. It's just a governance token. So that's endogenous. What you really want is asset-backed currencies that are backed by exogenous assets. Maybe Bitcoin, maybe Ethereum, maybe gold, maybe rainforests, maybe carbon credits, whatever, even fiat dollars. And that's the big difference. That's the difference in the path that Reserve was on when I was first introduced it to what it is today, is a kind of clear conviction around the importance of exogenous asset backing. And the more diversified, the more potentially stable it can be over a long term. Because you never know when there's going to be a I don't know, a bank run on gold or a nickel shortage or some type of asset in the supply chain go through some type of major change in the market. Diversification helps with that by spreading out the risk.
Maybe give us 3 examples of a creative stablecoin that Reserve Protocol enables.
Yeah, I think a good thing to come back to is this idea of unit of account, medium of exchange, and store of value. We talk about it a lot in crypto, or we were talking about it a lot for a while. These are like the basic functions of money, but they're really like an industrial age paradigm. When you move into digital money, you can do lots more interesting stuff than those basics, right? And the US dollar possesses all 3 of those features, although using it as a store of value would not be a good idea, since the US dollar currently can buy about 4 times less than it could in the 80s and about 8 times less than it could in the 70s. So that's probably not a good store of value. Digital age money allows this, what I would call expressive programmability. You can, and the money, it depends on what is a specific job to be done, right? Do you want stability? Do you want safety? Do you want it to be fast? Do you want it to be compounding in value? Do you want it to be sustainable, last more than a decade maybe? Do you want it to be productive? Money, our current modus operandi with money is fairly extractive, actually. US dollar, there are some benefits all around the world. We have a global reserve currency, but it's also a badge of extraction. And hopefully you're not the one that's being extracted from. But I think if you're in the 99%, you are the ones being extracted from. The 1% have done a really good job of figuring out how to beat inflation, how to diversify their assets, and how to grow their wealth considerably. On this idea of extraction versus regeneration, right now we use currency as just exchange it or hold it or trade it for things. But in the future, you'll be able to have a money system where the revenue from that money system can be redirected back into causes and charities. So like right now today, there's a stable coin called the Glow Dollar that a group is working on. And they have US treasuries backing it. It's got 4 or 5% yield, and they send all that yield to fight poverty. And you could have versions of that in the future. We could have a green dollar in the future. We could have a green dollar that's backed by carbon credits, rainforest assets, and green bonds. That would be pretty cool. Because essentially, one of the reasons why the US dollar has such powerful network effects is because of a relationship between the United States and Saudi Arabia from the 70s to price oil in US dollars globally. It's essentially a de facto oil peg money system. I'm not an anti-petroleum person, because you can also build cool water bottles to get water to people in very hard places around the world. You can build big hospitals and things like that. No product or activity on earth is perfect, right? There's always the negatives and the positives. Hopefully there's more positives. But back to your question around what kinds of stablecoins could exist in the future, they can also focus on privacy. They could focus on censorship resistance, or they just could focus on a fun brand. The US dollar is like the greatest meme in history, right? It's not backed by any assets. It's literally the textbook definition of a meme. And we're all buying into it for now. But branding of money is an important thing. Of all the things I've just listed, it seems like it would be the least important. But meanwhile, we live in a world where there's Bitcoiners and Ethereums, there's Delta Sky Miles, there's Roblox, there's Robux. Branding the money matters. I was looking at casinos. When did they first start branding their chips for gambling in the casino? And why do they do it? And so apparently the first casino to do that was the casino in Monaco. The casinos in Monaco started doing it. They did it so that it would make it more difficult to counterfeit the chips. And so that the medium of exchange friction would be easier. People would recognize the branding on the money. So those are, I think, some possibilities. Right now, I think this idea of a green dollar is super interesting. And then there's things like the high yield USD dollar that's got up to 8% APY. That's pretty cool to have a savings account on chain that I can get to in any wallet and I don't need anyone's permission. That'd be pretty cool. Some point, someone's going to make a basket of something that looks like an ETF, kind of. Could be like a combination of assets like S&P 500 and Bitcoin and gold and so forth. And that's pretty cool. I don't need Morgan Stanley or Merrill Lynch to go and find me all the right things to invest in and pay them fees. I can just find this cool product on chain. And if I've done my own due diligence, I've done my research, and I think it's sound, then I can make that choice. And I don't have to be a millionaire or an accredited investor to do it, depending on which jurisdiction you live in. And I would encourage everyone to follow the laws. Just make that clear.
Yeah, you're segueing into a next question here very nicely, because that just, as you were talking, it popped in my head that our token could essentially be a fund or ETF of sorts, where anyone could put any composition together in a basket, right? And the legality of things, let's leave that aside here for now. This is not investment advice whatsoever, of course, but in theory, it sounds like a super interesting tool to make that relatively easy, right? And in a way, can our tokens be used to launch just any arbitrary index? Let's stick in the crypto world, any arbitrary token index, right? Like maybe the top 20 or what have you. You could do whatever you want, it sounds like.
You could do the top 10 coin market cap. You could do the top 10 on DeFi Llama. You do the bottom 50 on DeFi Llama. You could do just the stable coins on DeFi Llama, or you could just do the lending protocols on DeFi Llama. There's a lot of really cool things to do. And what's interesting about this, like programmability changes everything. I say this a lot. We are right now in what I call the AOL era of stablecoins. America Online was one of the first internet service providers in the United States. It was one of the first tech unicorns in the United States. And this is kind of 1994, 95, 96. And now I don't know if America Online even exists as a brand anymore. Certainly, most people don't care about it. We're in that moment for stable coins. And it wasn't really until the early 2000s, in my experience, that people recognized the internet was here to stay. There were a lot of naysayers around the late 90s and even 2000, 2001 when the dot-com bubble burst that said, this thing's going to go away. The internet's dead. And then we got Facebook and we got Netflix streaming. We got some other cool stuff, Airbnb, and people, then they couldn't live without it in those kind of early 2000s. But to your point on this index, what's cool about programmable money is now you can do mashups. You can do really interesting things. In crypto, we talk about trilemmas and dilemmas all the time, right? The stablecoin trilemma or the decentralization trilemma. This will for sure exist with programmable money because the number of options of things you could emphasize there's a lot of them. I don't know if it's infinite, but there's a lot. Best I can tell, there's at least 12 or 13, and that's just from me. And I'm not a creative guy. But you could emphasize, you could build a currency that's a really good unit of account and medium of exchange, and it drives productive rewards back to its ecosystem. When you look at like the Red Cross and you look at other charitable organizations that are trying to get help to different parts of the world, maybe they're trying to help refugee camps across Africa. They need a economic system to be able to deliver money to the folks on the ground that are working and building and helping people survive. And that money system might be branded and it might have some unique benefits for the people who contribute to it. People like recognition and kudos for their contributions. It's an important part of being part of something, right? And that's what another money system could look like for, I don't know, the Red Cross or UNICEF or some other organization.
If you're building a basket of currencies, right, how do you bootstrap liquidity for that? Or I could see if I was going to build a basket of currencies and then use it as a store of value, right? But how would I bootstrap liquidity in order to use it as a currency? Or is it meant to be a medium of exchange?
Yeah, good question and super important one. It's a similar question to just being an entrepreneur, right? How do I go 0 to 1, which is this reference to Peter Thiel's book, referencing this idea of going from 0 to $1 million of revenue. And then after that, you've got to figure out how to go from $1 million in revenue to 10 million in revenue. You've got to bootstrap that growth and use cases. And the way you do that is usually through partnerships and strategy, and hopefully a unique insight about something that's missing in the market that your product can uniquely deliver. And what's fascinating about DeFi is you've got this community, this global community providing liquidity across many DEXs and many chains. And the financial incentives are baked right into those ecosystems. So they're doing it so that they can grow that ecosystem, but there's also a way for them to get paid. We also invest quite a bit into governance of those ecosystems so that we can help these R tokens get traction and reach their escape velocity. But it comes from a lot of different places. I've noticed there's a number of funds out there that's focused specifically on stablecoins and liquidity. And we're seeing it right now. I think probably a really cool use case that's happening is the Curve USD stablecoin that launched. And that one has a cool advantage, right? It's being bootstrapped on top of the largest stablecoin DEX on earth, which is a cool way it's just like the early playbook of how Tether got to be so big. It was bootstrapped on top of Bitfinex, and how USDC got so big. It was bootstrapped on top of Coinbase and Poloniex. I expect you'll see a lot of that happen with the winter stablecoins as well, is some type of bootstrapping strategic partnerships. And I can tell you of the R tokens that are live in the reserve ecosystem right now, the electronic dollar, which is the first one, it was launched by MobileCoin for their Mobi app. And it's been subsequently adopted by the RPay app, which is like a Venmo or a Cash App in 18 countries of Latin America. And so that's how, but it is really, I think, a battle of inches, not miles. MobileCoin does have a relationship with Signal. You can send MOB in the Signal app right now if you navigate to it. But the problem is that's a volatile currency. Who knows? Maybe in the future, they might be interested in a stablecoin. I know where to find a good one for that.
So we usually ask our guests, where do you see this industry going? Usually we ask, where do you see DAOs going 10x, 100x from now? I think for you more appropriately is, what does a world with hundreds or thousands of stablecoins look like? You said this before, you're a believer in that world, I think. So talk to us about that. How do we think about a world with maybe 10,000 different stablecoins?
Yeah. And I think the world is always going through these cycles where we're unbundling and we're rebundling. We're unbundling and we're rebundling. Right now, the financial system and organization system is unbundling. We're just unwinding it all. Just saying, hey, maybe those things weren't working so great. Let's try some new cool stuff out. And so I think we're in this great unbundling of the financial system. I think we're in this great unbundling of how to organize and accomplish things as a planet, as a society, as a community, whatever. And there's going to be a lot of experimentation during that period of time. There's a cool quote out there around innovation requiring lots of experiments, and not all will succeed. And that's okay. That's actually how we learn. That's how we figure it out. If you can imagine being the first explorers trying to cross the Atlantic or whatever, darn, that boat sunk. But how do you think we got here? You got to fail first. I hope that the failures, though, are small. So far, they have not been. But I also try to zoom out sometimes and look at the bigger picture. I think I need to double check this, but I think Wells Fargo has paid more in fines than there have been in all of crypto failures in history. So just one bank. People forget that a lot. When you go and look at the history of these fines for JP Morgan, for Wells Fargo, for corporations, right? I'm not even talking about stablecoins and financial system. I'm talking about centralized structures like WorldCom, the accounting fraud in 2001. Hurt a lot of people. They were lying about the accounting of this thing. And these failures and Ponzi schemes like Bernie Madoff, those things thrive and they fester because of this antiquated industrial age structure of centralization and gatekeeping, the data, the facts, how organizations work. Now, good news, not everybody is a bad guy out there, but there are a lot of bad guys. How I think it's going to work is we're going to have a lot of experimentation over the next 2 decades. There are going to be a lot more failures. There's going to be some incredible successes. And that's how we build a better, thriving, and regenerative society.
Great response. Have you ever sat around and have you thought about what's the craziest idea that you've thought about that should be a DAO?
Yeah, this is the best question. Someone was telling me about Pizza DAO a few days ago. Maybe it was you, Stan. I don't remember because we had pizza. And I shared this on Twitter with somebody. Some guy was asking, where's the best pizza in London? I was like, you should drop into the Pizza DAO Discord and ask that. I hear there's a bunch of experts in there. I think that's super cool. Yeah.
So obviously you have a lot of wonderful thoughts. I want to put my notifications on whenever you post to Twitter. So how do people follow you? Where can they find you and discover more?
Yep. I'm on Twitter at 0xJMG. That's my name, James Michael Glasscock. And that would be the best place is 0xJMG on Twitter. Yeah. Or drop into the Reserve Discord anytime. I'm always in there. You can tag me and I can answer questions. There's other people from the ecosystem that can also answer questions for you.
Is there a link to the Discord on the Reserve website? And if so, what's the website?
Oh, good point. Reserve.org is the website.
Amazing. All right. So cool. I really enjoyed it. I think we could go on for a couple more hours, but James, thank you so much for coming on the show. And if anyone wants to know more about stablecoins, reach out to James and or join their Discord and familiarize yourself with Reserve. Very cool project. Thank you so much.
Thanks, man. Bye-bye.
And that's a wrap. Spin and Solve are your hosts for DAO Deep Dives, a podcast about all things DAO. Thanks for tuning in. Till next time.